session of the day, and the next session is going to talk about asset allocation, role of alternative investment fund. And to give this session, I would request Mr. Brijesh Damodaran, Managing Partner of Auxano Capital, to kindly join us on the stage. Let us welcome Mr. Brijesh on the stage with a big round of applause. I'll do after this. Yeah, it's what this is just a backup.
नमस्कार. मी पण मुंबईकरच, पण सध्या मी राहतो गुरगावमध्ये. MFD हूँ, पण as you know, Rao sir, you have taken all my lines. But having said that, you still left me a few more lines, so I'll talk about that. Alpa ji, our coach, like the IPL is on the anvil, and she has told me that I have to play T20 for an asset class, which is a test match. Fantastic. So, I'll take that. So what I did was, this is 3.5 minutes. Okay. This is out here. I'll roll over 4 times, and that's it. So, it starts. See, let's go back to, 1999 or early 90s, when fixed instruments like, fixed deposit, corporate fixed deposits, LICs, they were the ones which used to be there, except for Unit Trust of India. And then suddenly, you have mutual funds, the new kid on the block comes in, and you pitch to share with your prospects and investors, this is something new. But no one knows what is happening around. There is no benchmark. There is no history, except for in US you have. So kya karega? So one of the questions used to get, guaranteed returns hai kya? ये फंड मैनेजर कौन है? ये NFO क्या होता है? ये IPO क्या है? लिक्विडिटी है नहीं है? Fantastic. So when AF came into play in 2012, the commitment amount, I'm saying commitment amount, not the invested amount, was 40 crores. December 2012. December 2022, can you guess what is the committed amount in the AIFs across Cat 1, Angel, Cat 2, and Cat 3? I'll give you a hint. It is equivalent to the cumulative SIPs from 2016 till date. It's more than 6.5 lakh crores. Out of that, Cat 3 AIF, which many of us would be recommending and doing with our investors, they are at 75,000 crores. The Cat 2, which predominantly also has options to invest in the startup space and also in debt, is at 5,75,000 crores. And Cat 1, which is the Angel one, you have 40,000 crores. So 2032 mutual fund आगे होगा कि AF आगे होगा, I am not debating that. No, we all have only one thing, that whatever happens, our investor has to make money at all times. I'll not talk about what the Morgan Stanley reports talks about what India's decade, because we all in this room are good to have the genes in which we're born. So what should I do now is that, I'm still on time. I should thank, Empower Education, the coach. We should thank, PIFAA for doing this. This is a fantastic initiative. I think a round of applause, I think a bigger round of applause. Thanks. And, the speakers earlier during the day and even on post-lunch session have made my task much easier. So I'll directly jump into why an AF, is an asset class which one should allocate. So if you look at history, and history resonates. History typically resonates. So let us look at how mutual fund industry has grown, into the trillions, which, Rao sir did talk about some time back, and how there is an insights into why the AF, be it the startup space, a lot of noise happens there. But why does it happen? So as an investor, you, me, I, everybody has a very powerful 2 letters. What's that? 2 letters. No. No. Na. मुझे निवेश नहीं करना है, मुझे समझाओ. We have this FOMO going about. Why? And then valuation, it's the game of valuation and valuation and valuation. And we, and then, Asha, you take one example and make that example the example, and then we believe that could happen. So if the bad eggs are coming out, it's good. So that as investors, we are empowered. We know what not to do. What not to do is more powerful than what to do. So I'll quickly jump into, today many of us in this room would be angel investing, putting in small checks. And there is no right or wrong answer to that. The only thing as a fund, so quickly a background, chartered accountant qualification, started the MFDs, being part of the MFD in 2009, formed a corporate in 2014. I think one of the earlier ones we merged, which did an M&A with, And then in 2016, we did our first investment through SPV. Today, we have got 2 funds, a Cat 1 angel and a Cat 2. Both we do. What I'm saying, I'm not propagating what we do. But having said that, I'll quickly jump into what the processes one needs to look into when you're looking to invest, be as an angel or be it in a fund. So I'll quickly jump few slides. This is the slide which you would like to look. Look at the part which we talk about, this part. So when you invest in a company, what are things which you look into? Besides other things, the founder acha hai ki nahi, company paisa banayega ki nahi, main paisa banayega ki nahi. But having said that, you should remind me. I don't want to go overboard. What is it? What is liquidation preference is something wherein, if the company goes burst, or if someone wants to buy out, how much of the money you'll get back? Do you look into it when you invest into an unlisted space, or for that matter, even into the startups? Look at ROFR. ROFR. What does ROFR mean? What does information rights mean? Do you actually get information rights? Do you look at data which you get on a regular basis, on a monthly basis, on a quarterly basis? How does the data come? Is it only a 4-line word, or is it some data points which comes and talks about growth, what talks about next quarter mein kya karenge, all of that? What about tag along rights? What about exit rights? What about reserve matters? So some of things like, if something goes wrong, what happens? What rights do I have? If I want to sell the company, do I have the rights as an investor to look into it? So those are things which one needs to look into. So do you ask yourself questions? It's just because, I'm an angel putting 3 lakhs and doing a spray and pray, 4 mein se, 10 mein se 2 aayega, and wo 2 aayega ki nahi aayega, I don't know. But that's the reason where fund comes into play. Just like that, you ask the fund manager the questions. Ask your investing companies if you're putting as an angel. So that's where, we would recommend that, putting in a fund, asking the right questions is the approach and the way forward. You could put in the fund which you are believing, where you get access into, where you get the information rights into. And some of the things which when a fund does, this is something which we do. Look at this. This is the one part which we do quite often and quite frequently. So the power to say no is very powerful. So if you are reviewing 100 deals a month, maybe only 2% comes and maybe 1 gets invested. I'll tell you one more thing. As a fund, from September of 21 till August of 22, we did not invest in any single new opportunity. That was when कि मैं 100 का माल मैं 500 में नहीं खरीदूंगा. So as a fund manager, the AIFs, at least in the space which we operate, has an option not to deploy cash 100% because we only ask for money when we see an opportunity. We don't take money upfront. So that could be a slight difference in what it happens from a mutual fund to an AIF. So what that happened? So in the last 4 months, we have done 4 investments. It doesn't mean that when you're sitting idle, you're not doing anything. Let's quickly go back. So, any questions you want to ask on this? I'm open to do that. I still have time. So let's take a process. So when we do evaluation parameters, we have a scorecard, we have analyst call, we have this. We actually go and meet at the ground site. So when the analysts come and meet the public company or the fund manager goes to visit the factories or the places where they are, even we do that as a fund manager. We need not, but we do that. One more thing, we have got deep skin in the game. Me and Ashish Padyar, was the GP for the fund. Nearly 9% of the overall invested corpus is our money. So we are the biggest investor in the fund. So our LPs come in as investors, but we have deep confidence in what we are doing. So that's how, and that's why all of this comes into play. We have our investment committee, wherein we have, I'll share that very soon. But the thing is that, the idea is that when you're looking at an AF, it's the infancy stage when mutual funds were starting out 2 decades back. But having said that, from a 40,000 crore to nearly 7 lakh crores over a 10-year period is not a joke. And that's where one can grow forward. And Amrit Kal definitely means that with the gift city being set up in Ahmedabad, and the ease of transaction becoming much, much easier, the inflows from abroad in dollar terms can be huge. I'll not give a number to that, can be huge. So how are you equipped to do that, and how are you going to take that? That's something which we need to look into. Basics remain the same, it's how you apply that comes into play. Fine. I'll give an exit story. So we did an exit in September of 22, and this is how it worked out. Drones is now big, is huge. In fact, we're the only VC in India wherein in the geospatial space, we have an investment in drone as well as in mapping. Both are huge. We started it in 2020 when we looked at here. They had cash runway only for 15 days. But the team was strong, and the existing investors pooled some money, including us, and it went ahead. And from that point to this point, it is only growing and growing. We also did a partial exit for some of our early investors. We sold, we sent 60% of the stake at an 8.5x kind of return, which is good. So does everything go well? No, absolutely not. Some do fail. We also have failures, but then we always analyze, why do ask. Please ask questions. You should ask questions to when you're investing. Kyun, kidhar. The founder, what he does, what he does not do, what are his passions, what he does on his free time. You're free to ask. It's not that you have a 45-minute kind of presentation and you cut a check. It doesn't work that way. Again, having said that, I'll show you a portfolio. 2 of our portfolio companies have been in Shark Tank. But that is vanity, if I can say that. So you got acknowledged, you got people coming in, the funding becomes easier, but end of the day, you got to perform. And that comes over a period of time. So that's why I said the coach is telling me to play a T20 when it is a test match. So unless you have a 7 to 9 year kind of an horizon, you should not invest in startup space, very clearly. It could happen that you can get exits much early, but unless you have that horizon in your mind, you should not enter. If anyone says something else, I think you should run away from that person. I'll quickly show some of our portfolio companies. This is our thesis. I think you should know our thesis. We invest in next-gen, technology-led, consumer-focused businesses, which has a subscription or a secular income. So we don't invest in ideation. Again, we look at, is the category creator, market owner. Elementary. But then we drive that. These are some of the companies in which we had invested. We just put some money in M Profits earlier last week. If someone likes, meat beer, we have got Moonshine, based out of Pune. And if you talk about genomics, we have genomics here. In fact, Moonshine came in Shark Tank last year. Prime OS just came into the Android laptop in Monday, this Monday. So these are some things which we have done. Stockal, if a lot of folks would have been using this if you are investing globally. So that's one of our investments. So this is how we have actually went through and done it. Any questions? Shoot. Yeah, so in a Cat 1 angel, the SEBI says that you need to have a commitment amount of at least 25 lakhs. And for a Cat 2 and a Cat 3, you have a commitment amount of minimum 1 crore. For a Cat 1 angel, again, you have some more conditions which SEBI says. You have to have a net worth of exceeding 2 crores besides your house. You need to also cannot invest in a company which is more than 10 years old. You cannot invest in a company which has revenue of more than 100 crores top line. So that's where, the SEBI wants to protect the investors who are putting 25 odd lakhs. Maybe it could change, I don't know when, if they want to increase the commitment amounts, but that's how it works. And typically, over a 2-year period, the drawdown happens, and so that you can invest. The thing is that a lot of things happen. So existing portfolio companies we have, they share some, from their circle. So certain case, we have our own network from there it comes. In other cases, the founders themselves, come to us. From that perspective, that's how we go about doing it. Yeah. Okay. Fair. So, the ticket size which we typically put from an angel fund in a company, typically, if you look at from the kind of percentage holding, where percentage holding goes anywhere from 3% to 16%. We have invested anywhere from 1.5 crores to 9 crores. With the Cat 2 fund, we'll be investing even up to around 15 odd crores. Talking about the failure rates can be very high, based on the ecosystem. So as I said, we have done 24 odd investments. We have got one failure as we speak. We are looking at maybe one more, which could happen. But having said that, at least around 3 to 4 are sitting on double, two-digit kind of, between from 10 to 30x kind of a thing. We already delivered 8.5x earlier. So, but again, you have to take it with one thing, disclaimer. Unless and until the money hits your bank, it is all Maya. So, so what you have actually seen earlier, like 22, money coming in, and, valuation being X, Y, Z, but then you have got a down round. That doesn't happen. So the thing is that you should not go overboard saying that my neighbor has this, let me also get the taste. Your neighbor would have got in much early. Other part is that only because big names have entered, let me also follow them. They have a different thesis. Let me put it this way. So let's say some of the large names who could put in 250 million and could face a loss and take a hit, please understand their fund size is in billions. So for them, 250 million is like a small amount. For us in this room, even 25 lakhs or a crore is a huge amount. It could be a decent allocation we're talking about as asset allocation. So that is why we say, put your asset should be allocated only if you have a horizon bit up to 7 to 9 years. You don't need liquidity. Please understand that. But having said that, this space is growing. And exits could happen earlier or later. We should look at the portfolio return rather than individual return, which happens in the same kind of a thing. Any more questions?
I think we can take it offline.
Thank you. And I think I should thank you for making me play a T20 in a test match.
Thank you so much. I would request her to please be here, and I would request Ms. Alpa to please felicitate sir. Requesting Mr. Sandeep as well to please join in.
So Just to add, if you all remember in panel discussion, Mr. Akhil Chaturvedi categorically mentioned that we all have to see AIF and the other alternate investments as our kitty. So I think this session was quite off. Thank you so much, Brijesh, for coming and joining.